Hello traders, Ala Peters on September 20th at 1:49 EST, 11 minutes before FOMC. Please take a look on proprietary Fibonacci levels and what to expect at the time of FOMC release. This key Fibonacci resistance and these levels had been identified in Fibonacci course last week, present in the trading room since Monday open. This been key support. This is a key support we've taken advantage of yesterday morning. This is key resistance Fibonacci reversal zone where ultimate historical highs had been present. Currently, prior to FOMC, we're dealing with this support. This is a chart you use for day trading entries on charts from 1 minute and higher. This is a chart I will convert at the time of FOMC to 1 minute chart, so you can witness the accuracy of the method instantly in live markets. If you understand and respect that this is key Fibonacci support you cannot short into, if you understand that this is ultimate high reversal zone where you expect selling pressure, please remember the following. Bias here is bearish. Bias here is bullish. This is the end of the minor trend. This is key Fibonacci support where you should never short near. This is where price bounced from multiple times since Monday open. Every single short trade near this level has extremely low success rate. Every single long trade that has rules met from this key Fibonacci support has extremely high success rate. So, lower the price goes, more interested in the market we will be. If price will push up higher here, our bias here is bearish, no matter if the rates had been raised, no matter if the rates had not been raised, as Fibonacci is the only natural predictive tool in the market. At the support, your bias is bullish. Lower the support, better long trades will be. At ultimate resistance, especially reversal zone, your bias firmly bearish. Rules are met, take a trade. If you were in the room prior to oil news release, you remember what we discussed, as this is again the chart that's shown you very clearly. Bearish news does not mean a thing. If price collapses to Fibonacci support. If you missed oil news release, I highly encourage you. Review videos that had been recorded at the time of oil news release, as oil reminded you. Rules are met, bearish trade, twice oversupply on oil doesn't mean a thing, as this Fibonacci support gave you flawless points of entry and skyrocketed until when? Reversal zone. This is hourly chart that you can use for trades 1 minute and higher. This is Fibonacci levels identified in the room well before oil news release. Again, if you missed oil news release, please review and watch. As despite bearish news this morning, oil already up 100 plus points, but struggling at reversal zone, staging powerful pullbacks for 30-40 points non-stop. And that's the power of Fibonacci. If you know the rules, if you know how to identify the levels, you buy at ultimate support reversal zone. If price is higher, this is your key support. And this is what we will be monitoring on S&P next. Identical structure as on oil. What you're witnessing on S&P, what you're witnessing on oil applies to any instrument, any time frame. As on Casco, fund manager who is currently in the course, with whom I spoke while on a break, respecting this as his key target. This is your long-term investment position on Casco. What you choose to trade, absolutely up to you. This is your long-term position on gold. Identical structure as on oil and S&P day trading charts, as you're witnessing where buyers stepped in from on oil this year, time and time again, which is what we hope S&P will do, collapse until the support and stage the same rally as gold had done, as Costco had done. So, at the time of FOMC release, in 6 minutes, I will convert this chart to 1-minute chart. Everything you're witnessing in front of you, you can learn in Fibonacci Mastery course. If you are joining Fibonacci Mastery course currently, you are an incredible advantage as you are getting Fibonacci Trading Bootcamp October 16th through 27th, value of $888 included in the course. October 16th through 27th trading room will be completely closed. 1 day in a bootcamp equivalent to 1 week in the course. Quicker you sign up, more prepared for the bootcamp you will be. All the information under Learn About Bootcamp, where you will be learning additional strategies that's not part of regular course. Ranger, that you can place on any instrument, any time frame. Bootcamp included in course fee. Graduates paying additional fees. New students who signing up now, bootcamp included. Please review the information on the website and contact me with any questions you may have. 925-257-4298 or info@fibinstitute.com. Only graduates can sign up for bootcamp alone. New students must sign up for a bootcamp in order to take advantage of a bootcamp. So, here we go, few minutes FOMC release. Very important financial news, most important financial news in US that impacts S&P highly. No matter what the news is, we know extremely clearly what to expect from S&P based on Fibonacci levels. You will witness next on 1-minute chart. Lower the price collapses, more bullish our bias is. Higher the price raises, more bearish our bias is. Brand new historical highs have this support very close. This is a support that we are drastically more interested in. If price collapses lower instantly, consider it a gift, as institutional bias remains firmly bullish. Which means lower you buy, more rules are met, more with institutional bias you will trade, as I've been reminding you since the start of 2016. This bullish rally been unstoppable. Currently at marathon mile 26. However, institutional bias firmly bullish. Please do not ignore or forget that. And that's the core of the course and Fibonacci Mastery class. So, here we go, 1-minute chart. Let's pay attention to the accuracy of the method that you can use on any instrument, just like we done at the time of oil news release on oil. At any moment, we will find out if rates had been increased or not on the most important financial news in US. Here's the announcement: target rate left unchanged as expected, which is positive news. So let's allow price to settle down. The first 5 minutes do not touch the market. Allow S&P to make up its mind. As again, this is key Fibonacci support we've been watching since early Monday. Prices here, S&P more interesting. Prices here, S&P more powerful to the downside. Shock or not, so bullish, not the place to buy. Here we go, key Fibonacci support. Will we see bullish push as we discussed? First 5 minutes, do not touch S&P. Bullish news doesn't mean a thing. Rate holding a target, meaningless. Key moment on S&P, as you remember, this is the support that's been key support on S&P since early Monday. This is the end of the minor bearish trend. Please pay attention. Flawless place to buy. But in order to do that, rules must be met. Here we go. Let's pay attention as price will start moving extremely fast. Remember, it's the identical place where Apple skyrocketed despite bearish news. Do you remember that? Apple up 180%? Anyone surprised? Should not be. Look at that. Shock or not. You know the rules. You know what you're paying attention to. Next, S&P can skyrocket 20-30 minutes in a matter of minutes. Key support respected as expected. Market is flawless Fibonacci puzzle, and that's what you're witnessing each and every day. Exact same formula I teach to beginner trader, I teach to hedge fund trader. As you're witnessing time and time again, Fibonacci is the only predictive natural tool in the market. Key moment on S&P. Anyone surprised that this support became resistance? My goodness. If price will collapse back down, consider it a gift. 5 minutes after FOMC release, price had done exactly what we expected. Exactly what Fibonacci levels told you. Week in advance. On 1 minute chart. Is that possible? Absolutely. Every single level in front of you completely proprietary. Every single level you cannot learn anywhere else. As we know extremely well. This is a support, this is a resistance. It's meaningless. Still, yet. Look at that fluff, look at that dance. When price crash and burn through 2500 finally. As we know extremely well, it's only bullish correction. And that's what market testing you for. Knowledge of price action, knowledge of weakness versus power. So please pay attention at this fluff we've been dealing with since FOMC release. This support and this resistance showing you clearly ultimate correction. Showing you clearly, if you know the rules, you're not participating in this chop. As we would love for this support to be broken. No bullish trades yet. Clear on that? Fibonacci level identified week prior in a play in front of you on 1 minute chart, with this being key support and this being key resistance. Meaningless structure. And that's the accuracy of the method. Look at that. So is everybody clear what we dealt with? We dealt with ultimate bullish weakness. This Fibonacci support caused the problem on your shorts. As we discussed with students, shorts are present and the reason why it was such a dangerous place to short near. Market just became more interesting, traders. We're finally out of this very dangerous range and this support we've been watching since Monday. So here's a key moment on S&P, buyers stepping in. We've gotten away from historical highs to the upside. Please monitor the levels. Here we go, traders. Key moment on S&P. As I warned you, this is not the place to short the market. In the next few minutes, this sell-off can be erased completely. This is where this chart, your barometer chart, is absolutely crucial. As I warned you before FOMC release, institutional bias, firmly bullish. What you're witnessing right now in front of you will be the key strategy of boot camp. This was expected. This is absolutely crucial Fibonacci support where your bias remains firmly bullish. And this is why it's absolutely crucial in this area to monitor for your profit target. And that's what price does every time, and that's exactly why I told you institutional bias, firmly bullish. Clear on that? Low as the price goes, low as a pullback, more powerful bullish rally will be. Absolutely no surprise whatsoever. None. One point on S&P, $50 on 10 lots, $500. Do the math. If you can do one profitable trade per day, if you can work 10 hours per week, if you walk away from the screen after one profitable trade and you apply sniper's mentality, the skies are the limit. Less trades, more money. Add the lot size. Add consistency, not number of trades, not screen time, not babysitting. Worst things in life worth waiting for. How did I know that price would do that? Fibonacci said so. Once again, you're witnessing, if you're trading with institutions, not against them, the skies are the limit. And that's how pure and simple price action is. And this strategy will be the core of a boot camp. Reversal zone, never to be ignored. Look at that. Anyone surprised what price had done? Knowledgeable trader takes advantage of the market from as low as possible. If knowledgeable trader understands that institutional bias remains firmly bullish, if knowledgeable trader understands that buying at reversal zone, worst idea ever. And that's what we've done at the time of FOMC. And that's what S&P is doing right now, pulling back because reversal zone is reached. And that's the key of the method. Buy low, sell high. Trade with institutions, not against them. And that's what you witnessed on this flawless FOMC release again. And that's exact same formula that will forever remain the core of the method. And this strategy will be only part of a bootcamp, not part of regular course. What you will choose to apply this strategy to, absolutely up to you. What is 3 points on S&P? On one lot, $150. On 10 lots, $1,500. Billions of dollars traded on S&P. If you become consistent trader, if you apply sniper's mentality, and if you play by the rules, all you have to do is never ever ever become trigger happy cowboy. All you have to do is identify what instrument you want to trade, as formula remains the same. On Netflix, all the same. On gold, identical. All the same levels. All completely proprietary strategies that you will never learn anywhere else. Fibonacci support respected. Anyone surprised should not be. Trail placed in perfect place. And that's the power of knowledge and price action. Any questions? Never hesitate to contact me. info@fibinstitute.com or 925-257-4298. Thank you, traders. Have a joy-filled afternoon, and remember, after the close of the trading room at 4:30 EST, I will be doing webinar in this room. If you would like to remain for the webinar, please remain in trading room. Look forward to seeing you there. Thank you.